Welcome to this deep dive, where we're cutting through the noise of a specific earnings call to get right to the most important insights just for you. Today, we're diving deep into the first quarter 2025 results from Inno Data, ticker ENO.
And when you look at the headline numbers for Q1 2025, they really tell a story of significant acceleration. We're talking about revenue hitting $58.3 million. That's a 120% increase compared to the same quarter last year.
Well, basically doubled. And on the profitability side, the picture seems just as bright.
It is. Adjusted EBITDA came in at $12.7 million.
Right, adjusted EBITDA. That's sort of the core operating profit number people look at before interest, taxes, depreciation.
Exactly. And for Inno Data, that's a 22% margin on their revenue, and it represents a massive 236% jump year over year. Huge growth there.
Okay, so strong top line and bottom line improvement. How's their cash situation?
Very strong. They finished the quarter with $56.6 million in cash on hand. That's up $9.7 million just from the previous quarter. And importantly, their $30 million credit facility. Still completely undrawn. They haven't touched it.
Good sign. And I heard the revenue number actually beat estimates.
It did, yeah. Came in ahead of what analysts were expecting. And their adjusted gross margin was 43%, which, beat their own target of around 40%. So better performance across the board.
Okay, so not just growth, but profitable growth.
Yeah.
And better than expected. You mentioned net income, too.
Right. $7.8 million. That's a huge jump from only $1 million last year.
That is significant.
Now, part of that benefit came from accumulated net operating losses, basically old tax deductions they could use. That happens sometimes with fast-growing companies.
Sure, makes sense.
Yeah.
But the overall picture here is definitely one of strong positive momentum, wouldn't you say?
It really is. And listening to the management commentary on the call, it wasn't just about, reporting good numbers. It was reinforcing the idea that this performance is driven by real strategic progress.
Okay, let's unpack this then. Let's move beyond just those headline figures and really understand the strategic stuff that's fueling this growth. Yeah. Because that's what signals what might happen next, right? The call seemed to focus on three core areas driving things: generative AI training data, agentic AI solutions, and generative AI trust and safety.
Yeah, let's start with that first one, generative AI training data. The clear focus here is on building, really robust and sophisticated capabilities, the kind needed for the next wave of large language models. We're talking about the ones pushing towards what people call AGI, artificial general intelligence, maybe even ASI, artificial superintelligence down the line. And that takes investment.
Right. And did they detail where that investment is going?
They did. They're expanding the diversity of domains they can handle, think really specialized fields like advanced math or complex chemistry problems, and also expanding languages within those complex domains, like adding Arabic and French capabilities. They're also creating data for models that need to do complex reasoning, not just simple Q&A, but models that handle tricky multi-step problems.
Got it. So deeper and broader data capabilities.
And underpinning all of this, they're developing better ways to collect pre-training data at massive scale. This is the foundational data those next-gen models are built on. So it's absolutely critical work.
Okay, here's where it gets really interesting for you listening, I think. The actual traction they're seeing with real customers, both new ones coming in and existing ones, giving them more work. They spent a good bit of time on this.
Yeah, they talked about onboarding 4 potentially very significant new customers just in Q1. The first one they described as a, quote, global powerhouse, integrating LLMs and AI really deeply across huge sectors: finance, telecom, government, cloud infrastructure.
So not just experimenting, but embedding it.
Exactly. The insight there is these aren't just small tests. This company is putting Gen AI right into their core applications.
That is huge. What about the second one?
Second new customer, a cloud software company, already a leader in CRM. They're using LLMs and AI to make their own platform better. And importantly, they're taking a leadership position in launching agentic AI capabilities. We'll definitely talk more about agentic AI in a minute.
Okay. What's interesting there is Inno Data isn't just working with the companies building the giant AI models, but also companies integrating AI deeply into their own software products.
That was a great point. Exactly. The third one is a major Chinese technology conglomerate, huge digital commerce ecosystem. They're building their own family of multimodal LLMs models that understand text, images, audio, you name it. And these models are already being used widely across their apps.
So that shows their global reach, working with companies building their own complex AI.
Right. And the fourth example, a global healthcare company. a leader in things like medical imaging, diagnostics. They're actively using LLMs and AI to improve diagnostics, clinical workflows, patient outcomes, developing foundation models that handle all sorts of data, images, records, reports.
Wow. That points to AI moving into really specific industries and Inno Data handling sensitive, specialized data.
So you see the breadth there, right? Global powerhouses, software leaders, international tech giants, healthcare innovators. It's a strong signal about the market demand they're tapping into.
Definitely. And then there's the expansion happening with existing customers. This isn't just about landing new logos. It's about proving value and growing those relationships. They gave some pretty compelling examples there, too.
Yeah, one was a major software company. They started working with them last year. The revenue from them in all of 2024, only about $400,000 now. They have a late-stage pipeline with this same customer that has the potential for over $25 million in bookings just in 2025 alone. And they expect it to grow beyond that.
Wow, $25 million potential from 400K. That's exponential growth. What problem are they solving that justifies that kind of jump?
Yeah, it's huge. The key insight here is about solving a deep technical challenge for that customer's GenAI models. Apparently, these models needed help handling very specific, detailed, complex prompts for both text and image outputs. So Inno Data developed this innovative data generation pipeline.
Okay.
The technical terms they used were things like supporting detailed hierarchical labels, basically breaking down complex info into structured levels, and reverse prompting, which is a pretty sophisticated technique, plus specific evaluations.
So really getting into the weeds, technically.
Exactly. All aimed at improving the customer's product experience and, crucially, laying the groundwork for future multimodal and agentic models they want to build.
That level of deep technical partnership, yeah, that's what can unlock significant spend. What other examples did they give?
Well, another big tech customer, revenue was only $200,000 last year. But year to date, just in Q2 so far, they've already secured 2 new wins worth about $1.3 million in potential revenue. And there's another opportunity in the pipeline there worth roughly $6 million. So again, small start, but significant expansion happening.
It's a pattern. And they mentioned a big tech hyperscaler too, one of the major cloud providers.
Right. They expect to support pre-training data collection for specialized models there. And they're actively pushing for more model safety and evaluation work with that customer too. Shows they're getting integrated with the core AI infrastructure builders.
And one more, a Gen AI lab.
Yep, a highly regarded generative AI lab just signed a new data collection deal about $900,000, and they're talking about potentially doubling that. Again, it highlights how critical that pre-training data collection is for the labs building the absolute cutting-edge models.
Okay, putting this all together, management shared their belief that these big customers likely budget, what was it, hundreds of millions of dollars a year just on Gen AI data and model evaluation.
Hundreds of millions, yeah. So when Inno Data talks about these multi-million-dollar opportunities, it suggests they're successfully tapping into, meaningful fractions of these enormous budgets, which is why they called the traction super exciting.
It really puts the scale into perspective. And speaking of scale, they spent some time on their largest customer relationship.
Yes, and this was a key update, a really important one. They signed a second master statement of work. An SOW, basically a big contract outlining the work, signed it the literal morning of the call.
Wow. Okay.
This new SOW lets them deliver Gen AI services funded from a totally distinct budget category within that customer's massive organization. A budget category they believe is materially larger than the one currently funding their existing work.
That sounds like a big deal. Diversifies within the customer and opens up potentially much bigger spending.
It's a very big deal. Exactly.
Right.
Signals potential for significantly deeper engagement. Now, they did mention they plan to invest about $2 million of their own money in Q2 to support this new SOW and related programs. They expect this investment to temporarily hit Q2 margins a bit because the spending comes before the revenue fully ramps up, but they clearly see it as a strategic move, an investment to position themselves for substantial future growth with this absolutely critical customer.
Makes sense. Invest now for bigger returns later.
Oh.
Okay, let's shift gears to that second strategic area, agentic AI solutions. This sounds like a major focus going forward.
It really is. They highlighted a collaboration with one of their smaller big tech customers, specifically on AI agent dataset creation and AI agent building. This work's expected to start in Q2, could involve creating around 200 agents, conversational and autonomous ones across multiple different domains. The potential value for just this initial work, Around $6 million to start.
Okay, let's pause there. We should probably make sure we're clear on what agentic AI actually means. It's kind of a buzzy term right now.
Good point. As they explained it, it refers to AI systems that don't just, answer questions. They can actually autonomously initiate and carry out complex multi-step tasks to achieve goals with minimal human input.
So they can kind of think and act on their own more.
That's the key difference, yeah. They reason, they make decisions, they adapt, they take initiative to solve problems. Inno Data's view is this represents a fundamental shift from AI being just a tool you instruct to AI becoming more of a collaborative partner.
Interesting.
They think agent-based AI is going to be the core tech that really unlocks the full value of LLMs for businesses.
And on that subject, unlocking value for businesses more broadly, they gave examples beyond just building models and agents, right? Like helping companies use AI internally.
Exactly. They highlighted work helping a very large social media company integrate Gen AI into their engineering operations. They've won engagements worth about $1.6 million for this.
What kind of services are they providing there?
A whole range. Integration help, prompt engineering, which is all about crafting the right inputs to get the best AI outputs, program management, even putting their consultants on site with the customer.
And what's the result? Is it actually saving money?
Seems like it. So far, they've automated 5 workflows for this customer. They estimate that alone will save the company about $6 million.
Wow.
And the ambition is much bigger. They want to automate about 60% of 90 identified workflows by the end of the year, targeting at least $10 million more in savings this year, plus, the benefits of reducing friction, speeding up development.
So it's not just about training AI, it's helping companies use AI effectively to improve the bottom line. And they mentioned talking to other companies about similar things.
Yeah, advanced discussions with several others, helping enhance both their products and internal operations using generative AI.
Okay, so that momentum flows right into the third strategic area, generative AI, trust and safety. They called this mission critical.
Absolutely. Not just fast growing, but mission critical for anyone deploying AI seriously. They announced expanded engagements providing these trust and safety evaluations for an existing big tech customer. Again, not their largest, but another relationship that's growing significantly. These specific engagements have a potential value of around $4.5 million in what they think will be annual recurring revenue, ARR.
$4.5 million ARR just for trust and safety work with one customer. That's substantial. What did that work involve?
It's pretty broad, spans multiple divisions within that customer, multiple languages, English, Spanish, German, Japanese. It involves continuously testing both public-facing models and beta models still in development, including highly specialized ones. They gave an example of testing a model trained for chemists and nuclear scientists to make sure it would refuse to give harmful advice. Shows you the kind of complexity and responsibility involved here.
Definitely high stakes. How are they winning this work?
They credited investments in their own proprietary trust and evaluation platform. It apparently has innovative features. Plus, they got through the necessary security reviews quickly, so the work could start right away.
And they see potential for even more with this customer.
Yeah, potentially. Including paid pilots for other types of trust and safety workflows. And to stay ahead, they've invested in methods specifically designed for predicting emerging risks. As these language models get more advanced and people interact with them more, new risks pop up.
That makes sense. You mentioned something really unique earlier, too. Evaluating LLMs in physical devices, robotics.
Yeah, that was interesting. They're even evaluating LLMs embedded directly into physical devices and robots, which means their teams have to go work in the customer's lab sometimes, testing performance right at the hardware level. That's definitely beyond typical software testing.
For sure. And there was another potential big win in trust and safety.
Right. With another enterprise customer, they've been shortlisted as the lead vendor for a potential multi-year program, focused squarely on evaluating their foundation models, looking for harms, bias, checking robustness. This program could be worth about $3.3 million in annual recurring revenue if they win it.
So potentially another significant recurring stream. What's involved there?
They're doing proofs of concept right now. Things like adversarial testing, basically trying to break the model safely, and model probing. The proposed full scope includes comprehensive red teaming.
Which in AI safety means deliberately trying to find flaws and biases, right?
Exactly. Plus, implementing guardrails and rigorous evaluation across different modes, text, images, video, audio, shows you how comprehensive AI evaluation needs to be now.
Okay, and supporting all this trust and safety work, they formally launched the platform at NVIDIA GTC.
They did. Their generative AI test and evaluation platform, described as an enterprise-grade solution, helps companies check the integrity and reliability of their LLMs throughout the whole development lifecycle. Masterclass was announced as the first charter customer.
And they're talking to others, maybe partners.
Yep, discussions with several other high-profile enterprises, including a global consulting firm about potentially partnering up to take this platform to market together.
What makes it different, did they say?
They said it basically productizes the advanced techniques they developed doing hands-on services work for the big tech players, turns it into an autonomous system. A key feature they highlighted is a continuous attack agent. It autonomously generates adversarial prompts, tricky inputs to automatically find vulnerabilities in real time, so companies can fix issues faster.
Sounds useful. When is it available?
It's in early access now, general availability targeted for late Q2. The core message here is, trust and safety isn't a one-off check. It's critical all the time through the whole life cycle. And it gets even more complex with these agentic multi-agent systems coming online.
Okay, so putting all this customer and strategic momentum into a broader context, they explicitly link their business to the massive Gen AI investments from the biggest tech companies, right? The Magnificent Seven.
They did, directly. Citing examples right from those companies' own earnings calls or investor days, like Microsoft planning to invest around $80 billion in AI infrastructure just in fiscal 2025. Meta raising their spending plans specifically for AI infrastructure, including building Llama 4, Amazon's CEO calling AI a once-in-a-lifetime reinvention, Alphabet crediting growth to their unique full-stack approach to AI.
So the biggest players are spending enormous amounts.
Right. And the insight management offered here is that because these customers are so critical to them and because those customers are investing so heavily in AI, almost regardless of the short-term economy, they believe short-term business cycles or even things like global trade policies are less likely to impact their fundamental prospects. They're tied to a bigger wave.
They also pointed to the market's general bullishness on this space, didn't they? Mentioning a competitor's valuation.
Yeah, their largest direct competitor, apparently recently valued at $25 billion, which is like a 29 times multiple on their last year's revenue, even though they were EBITDA negative.
29x revenue while losing money? Wow.
Exactly. Their point was, this shows how highly the market values companies positioned right in this specific part of the AI infrastructure layer.
Okay, so let's tie this back to their own guidance and strategy then. What did they say about the full year outlook?
They reaffirmed their full-year revenue growth guidance, still expecting 40% growth or greater for 2025.
And they addressed the customer concentration issue head on.
They did. Explained it as an intentional strategy. They're choosing to embrace the growth coming from both broadening their customer base and from that huge expansion potential with their largest customer, even if it means concentration risk in the near term.
How do they justify that?
They see it as a natural part of their evolution, and they cited market precedents, companies like Snowflake, Datadog, Palantir, that also started with significant customer concentration before diversifying over time as they scaled.
Okay, and they warned about volatility, quarter-to-quarter swings.
They were quite upfront about that, yeah, especially with that largest customer. They exited 2024 at about a $135 million annualized revenue run rate with them. Q1 was up roughly 5% from that run rate. But they anticipate Q2 might be down around 5%.
Why the fluctuation?
They just said it's due to the customer's dynamic demand signals, which are constantly being updated based on their own internal AI development progress and needs. It's just the nature of these massive, fast-moving projects.
So the key takeaway for you on guidance is management feels it's conservative.
Seems so. Particularly regarding how quickly those new customer relationships might ramp up. They explicitly said they prefer to set expectations they can potentially beat. Surprise on the upside.
And they plan to reinvest.
Yes, reinvest a meaningful chunk of their operating cash flow back into the business, into innovation, go-to-market efforts, attracting talent, while still aiming to deliver adjusted EBITDA above their 2024 results. So growth, but with continued profitability in mind.
Got it. And briefly, on win rates, how do they track success?
Yeah, they said it's hard to track with traditional metrics like, win-loss percentage on every proposal. Their model is more about starting small, executing really well, building trust, and then expanding. The metric they focus on is the success rate once they get to a pilot project. If a pilot moves forward into production, they believe they win a very, very large percentage of those.
Okay. So overall, it sounds like a call that projected a lot of confidence and momentum.
Definitely. Management used phrases like the business is on fire, feeling like the engine is fully lit and accelerating. It painted a picture of a company positioned right in the eye of the Gen AI investment storm.
So what does all of this mean then? Let's transition. Let's think about potential market implications, future opportunities.
Okay, now before we go any further here, we need to be absolutely crystal clear. This is a deep dive, right? And this next bit is strictly for discussion purposes. It is not financial advice. Let me repeat that. Not financial advice. We are simply exploring potential interpretations and maybe a hypothetical trade idea based only on the information presented in this earnings call we've just discussed. Please do not make any investment decisions based on this conversation.
Okay, absolutely crucial disclaimer there. With that out of the way, let's put on our hypothetical analyst hats for a moment. Imagine you were pitching a potential trade idea based on this call. Possibly. Let's call it outrageous but plausible idea. It might be arguing for a long position in Inno Data, betting the stock goes up, ticker ENO. Now, the part that might seem outrageous at first glance is betting heavily on a company that admits it has customer concentration risk and explicitly warned about quarter-to-quarter volatility. They even suggested a slight dip next quarter, Q2, with their biggest customer. That usually makes investors nervous.
Right. But the plausible side of the argument, drawing directly from the call details we just went through, is that this company seems to be riding an absolutely explosive multi-year wave, this massive Gen AI investment from the world's largest, richest tech companies. The sheer scale of the potential opportunities they detailed, it's immense. You've got that $25 million plus pipeline potential with just one major software customer, securing access to what they believe is a materially larger budget category with their biggest customer through that new SOW.
Yeah, and those trust and safety numbers. Potentially $4.5 million ARR plus another $3.3 million ARR opportunity just highlighted in that critical area. And that $6 million potential start in agentic AI.
Exactly. When you start adding those up, even just the visible pipeline and potential new deals they talked about, it suggests significant potential upside that could maybe drive performance well beyond that conservative 40% plus growth guidance they reaffirmed.
And the competitive valuation point.
Right, that competitor at 29 times revenue, even while losing money. It serves as market evidence, perhaps, that investors are willing to pay a serious premium for companies truly positioned in this specific AI infrastructure niche. So the argument could be that Inno Data's own valuation multiple has room to expand, especially as these big wins hopefully convert into actual revenue, which could also, over time, help lessen that perceived concentration risk as other customers grow larger.
And the Q2 investment.
The planned $2 million investment in Q2, while it hits margins short term.
It's framed as strategic, designed specifically to fuel future growth by unlocking that potential in the largest customer's new, bigger budget category.
So the hypothetical thesis might be?
The core hypothetical thesis you could construct is that the sheer scale and, importantly, the inbound nature of these opportunities driven by this tidal wave of Gen AI spending from the Magnificent Seven and others could potentially outweigh the near-term volatility risk that comes with their current customer base. Okay, but again, let's stress this. Purely an example of how one might interpret the call data from an investment angle. It is absolutely not financial advice.
Definitely not. So just to quickly recap the key takeaways from this deep dive into the Inno Data call for you listening, we saw strong Q1 results actually beat expectations. We heard about significant momentum, securing potentially massive opportunities across Gen AI data, agentic AI, and trust and safety, with major tech and enterprise customers.
We also heard a clear strategic direction from management, embracing the growth, planning thoughtful reinvestment. And yeah, the overall tone from them was one of very high conviction, real excitement about the future.
It certainly sounded that way.
All right, we'll leave you with this final provocative thought to consider. Think about how this rapid evolution towards more complex, more autonomous, maybe multimodal AI systems, the agentic AI, the advanced models they discussed, think about what that requires. It's not just continuous, highly sophisticated data collection to train them, but perhaps even more critically, it necessitates increasingly robust, ongoing trust and safety evaluations all the time, throughout their life cycle. So the question is, how large will this required infrastructure and service layer actually become globally? And how quickly will demand for these kinds of services scale up as AI gets embedded deeper and deeper into critical systems, maybe with autonomous agents becoming common across businesses and even our daily lives? Something to think about.
Thank you for joining us for this deep dive into the Inno Data Q1 2025 earnings call. We hope guiding you through this material helped you quickly grasp the key insights.
Join us next time for another deep dive.